Welcome back to Bunnex Investment Group. In this video, we are going to talk about a very simple trading strategy for small account holders. So not everyone can afford to deposit huge sums of money to trade with. In this particular lecture, we'll talk about a small account trading strategy. It can also be used for passing prop firms, which is actually something that is trending right now. Everyone is looking to get a funded account whereby they can trade with the 200 up to 5 million in funding. For anything to be useful in trading, it needs to be done consistently. I had to say this so that even this particular strategy that we'll discuss, for it to be useful, you need to do or to practice each and every step consistently. If you are someone who jumps from strategy to strategy, it's without satisfying the number of trials required by those particular strategies, you are likely not going to make money. Without further ado, let's jump into the content. Firstly, the time frame of the strategy. The time frame of observation is going to be the M15 time frame. This time frame clearly shows the daily flow as well as can generate enough entries to grow a small account. So we're not going to be diving to the H1, H4 or even looking at higher time frame buyers, but we are just going to go straight to the M15 time frame. You will be trading Euro USD if it is a personal account, and gold if it is a prop firm account. Gold is something that actually can move quickly, and you can actually experience huge moves within a very short period of time. So for prop firms, you will be using gold, and if it is a personal account, you will be using euro against the dollar. Here are the indicators that are required. To remove subjectivity, we need to incorporate indicators. These indicators are all exponential moving averages of the following periods: period 5, period 13, period 50, period 200, period 800. These will help us to see points of market entry. Here's the summarized strategy in statements. Step 1, we need to see 50-200 EMA cross. You might need to write down these instructions. Step 2, you need to see price retest the 200 EMA. Then step 3, you need to see 513 crossing over and then make an entry. Then put stop loss above structure and take profit at 1.5 R. Let's now have an illustration. Before we continue, please join our free trading community where we share free signals, free trading advice, as well as setups. The link is right down in the description box below. Be part of the winning community. We've said step 1 is to actually see 50-200 EMA cross. This is gold, a snippet from gold. When we see this crossover, it means it's time to get ready. Then the next thing is to actually see price coming back to the 200 EMA, like in this case. After coming back to the 200 EMA, we now need to see a 513 EMA crossover, and that is the signal for entry. We've said stop loss below structure and take profit at 1.5 R, meaning you are going to make an exit at this particular high price. Let's now go over the charts to see this strategy in practical form. So this is gold against US dollar, which we are going to use for our examples. We've said the first thing that you need to see is a 50-200 EMA cross. When we see a 50 crossing a 200, it's time to get ready. When that happens, we need to see price retesting the 200. As you can see, it retested here and then retested here, but there was no 5 in yellow and red 13 in red crossover. When they made a crossover, that was when we were going to make our entry. Whenever we move 1.5 R, we need to put our stop loss in profit. So this was our entry. when it actually moved, it actually reached plus 1.5 R in our direction, right? Basically like that. 50-200 EMA cross. After that 50-200 EMA cross, we need to see a retest of the 200 EMA. 50-200 EMA cross, 50 in blue and 200 in white, crossed over, and then a retest was issued at this particular price point. After that retest, we can see 513 crossing over at this particular price point, and then we were going to make our entry. We wait again for the crossover of the 50-200 EMA, and then we wait for the retest of the 200 EMA. So in this particular case, we saw a 50-200 EMA cross that occurred here. Then after that, the market came to the 200 EMA, and then after that we can see a 513 EMA cross, and the market went in our direction. As you can see, we have actually accumulated 3 trades in a row without any loss. Fortunately, the loss came where we had a crossover, 513 cross to the upside. We were prompted to go buy, to go long, but unfortunately the market went against us. In this particular case, a 50-200 EMA cross was issued, and then there was no retest and crossover of the 513. So basically that is what we will be looking for. We need to see a 50-200 EMA, like in this case. If they come to this 200 EMA and give us a 513 EMA cross, that is actually a point of market entry. On that note, we've come to the end of our today's video. I'll see you in the next one, and be blessed.